Yo, what's up, everybody? It's Marco from Digital Dash. In this video, we're going to be going over my 2023-2024 trading plan, and I'm going to be explaining how I plan to stick to this plan and stick to these guidelines to become consistently profitable by the end of 2024. So starting off, again, you guys know I like to title everything so I can easily find it in Google Slides. I start off by having my first main goal on the cover on the start so I can know what is the point of this plan and why am I following it in the first place. I have a goal of becoming consistently profitable, and I want to prove this by growing my account to $6,000. My next goal will then be to look to get funded and add funds to my personal trading account. This plan is carefully crafted to combat the problem of inconsistency in my trading. Live, trade, and die by this plan. Deviating from this plan will only result in failure. Following this plan is the only way to achieve my goals. Right? Following this plan is the only way to achieve my goals. It was carefully crafted to combat the problem of inconsistency. Again, I'm able to make a lot of the money a lot of times. My problem is I can't consistently make a lot of the money and keep a lot of the money, because when I do start making a lot of money, I get overconfident. I start trading out of bounds, right? I may put on too much size, whatever the case may be. I may start taking trades that are high probability. I may start taking trades that are different from the trades that I usually take because I'm overconfident. Right, so this plan is carefully crafted to combat the problem of my inconsistency. So sticking to this plan will get me to my goal of becoming consistently profitable. Right, so that's what this plan is looking to solve. I broke everything up into almost like a checklist, almost kind of a flow chart kind of situation. Before trading, I can refer to this column. When I'm doing my technical analysis, I can check this column, and then being reminded of my goals again. Now, what daily goals do I have? I have my long-term goals. What daily and weekly goals do I have? So before I trade, I'm looking to make sure I'm journaling and building the story and context of the market. I want to make sure I review my previous trades to know what problems I need to fix. I want to make sure I review my pre-market plan so that I'm not coming to the market and then just veering away from, all the other thoughts or just seeing it something trigger and hopping in because of emotion. I want to make sure I'm reviewing the pre-market plan. I want to make sure I'm coming to the market ready to perform, right? Whether it's working out, going on a walk, coffee, whatever it is. Making sure I'm coming to the market in an ideal state to perform. I have a video about this. Treat trading like an Olympic athlete, right? Come to the market to perform. Make sure you're doing performance checks to make sure you're coming to the market ready to perform. How was your previous day's trading? Are you trading good? Or are you trading bad, right? Have you noticed conditions change and you took a couple losers? That could cause me to come into the market already, psychologically destroyed or already on tilt. So identify that performance check before placing the trade. After 2 losses or 2 losing days, step away. Symptoms of tilt may creep in. Live outside of trading and improve. Come back a better person and in a state to perform. These are the things I look for when I'm doing my technical analysis. Making sure I keep the bigger picture in mind. Not just drilling down and looking at the 5-minute and then getting trapped on the wrong side of the trade and then revenge trading and still not being aware that I'm on the wrong side of the trade or not being aware of the overall picture, right? So I just have reminders here for my technical analysis, and then I have more daily goals, right? So I don't want to see any more home runs. Those home runs mean nothing if they can't be consistently made, right? So I'm not worried about the money anymore. I want to consistently hit my goals and consistently be able to extract profits out of the market. So my daily goals are no longer P&L based except for not losing more than $95 a day. I can't go in the market and say how much I'm going to make, but I do have the control to make sure that I don't lose more than $95 a day. So again, this is redefining your trading success, and I have another video about that, right? I can link that, redefining your trading success. So it's not based on P&L, it's based on how well you stick to your plan. Now, losing no more than $95 a day is within my plan, right? So in that case, it's P&L based, but sometimes it's not, measuring your success may not always be reflected in the P&L. So it's how well you can stick to your plan. So even when you're down $95 on the day, if you stuck to your plan and made sure that 95 didn't turn into 96, then you were successful. And then I have a weekly loss limit in place. I have a hard daily loss limit in place. And I have a weekly loss limit in place. And I think this is going to make a huge difference to my trading, right? This is going to be huge for my risk management because now I cannot allow myself to lose more than this money. My broker is going to liquidate the trade, right? And then when I'm up, on the day and on the week, 2R, then I'm also looking to get out of the trade, right? Again, I'm not here to make money right now, right? I know how to let winners run. I know how to do that, but it's nothing if I have a day where I let a winner run and I was up $500, and then next, that was on a Tuesday, and then by Friday I gave it all back to the market because conditions changed, and I was stubborn, and I had a big head from that huge win. I'm not here for that anymore. I'm here to be consistent. So as much as it broke my heart to put a daily limit on how much money I could make, the bigger picture in the end is consistency, right? If I go and I can make 2R every single day and then get limited out of the market, imagine what it is when you have size, right? So how would you be able to complain about going into the market and making money every single day? How could you complain about it? So the new goal is to manage your capital, preserve your capital first, and then make capital. But the first goal is managing and preserving your capital first, and then make profit. If we can become good risk managers first, then we can become good winners, right? Reminder, we will come out profitable if we stick to our 2-to-1 per trade and stay within our risk, right? $190 a day is not necessary. We don't have to force our win limit. But we do have to enforce our daily loss limit. We don't have to try to overtrade and force our win limit. Because even if we only make $30 on the day, if we continue to do this and stick to our 2-to-1 per trade rule, then we're going to come out profitable. So there's nothing to worry about in that scenario. Okay. So again, carefully crafted plan to put all of these things to rest, right? A carefully crafted plan to put all of these concerns and all of these mistakes, we're putting them to rest. So I don't have to worry about, in the end, this will work itself out. We just have to stick to this. We must now be selective with our trades and allow probabilities to play out. We got to prevent overtrading. We got to prevent revenge trading. We got to secure those consistent gains when the market gives them to us, right? So that's why I'm okay with having a daily win limit. I'm okay with having a weekly limit, because we got to secure those gains when the market allows for it, right? Because we see conditions can change and market may not allow for you to, it may not hit your target. It may not go to target. It may run up and then go back to stop loss. The market may not allow you to make money. So that's why it's so important for us the only thing we're in control is how much we're risking and how much we're giving to the market. So I have my risk management rules. I do have a small account, so I'm willing to risk 3% per trade, right? No more than that. We can't. I have bracket orders in place that have a hard stop and a limit target that pops up as soon as we enter the trade. Our size, we're going to be sticking to 2 contracts for high probability setups when the conditions are really well. When we're playing gaps within the trend continuation, when we're getting clear, obvious breaks and retests, we're going to be playing 2 contracts, right? On something we're not so sure about, but we're still willing to put on risk in choppy conditions, whatever it may be, protecting our gains after a winner, sizing down after a loser, whatever the case may be, we're going to be using 1 contract for those scenarios. So again, there's no thinking, there's no guessing. If we're coming off a win, let's just size down, remove emotion. If we're coming off some losers, let's just size down, remove emotion. Sizing down is going to cut all of the problems in half already by 50%, right? Because not as much money is at risk, not as much is at stake. You can think more clearly. And then at least 2-to-1. We need, bare minimum is 2-to-1 because stats show, journaling shows, tracking shows that we have a 40% win rate. Right? So we have to have a 2-to-1. Again, carefully crafted. If we don't stick to this 2-to-1, then we literally will see failure. We literally have no other option but failure because we only have a 40% win rate. So we must stick to these guidelines. Again, sorry to add the emphasis, but I have to emphasize. And then, we have our clearly defined what we do to identify a trade, what our reasons to enter are, and these are our entry signals and confirmation. So we want to identify the trending condition, see our supply and demand zones being removed. Are we seeing breaks of structure? Is absorption happening at zones? Are bullish or bearish candlesticks forming at levels of interest, right? And then the biggest thing is having clear if-then statements. If this level breaks, I will enter here with the stop loss. If price continues to hold above or below, I will enter and place my stop here, right? And then for planned trades that we take, because I've seen this happen as well, we have a trade that's all planned out and the market changes and we ignore those signals because we want to take our plan to trade. For planned trades, is the market keeping my reason to enter intact or have conditions changed? This is very important to ask myself because, again, it's very easy to almost get stuck in a bias, or it's very easy, once you've done a bunch of analysis and you really want something to work, to fall in love with the trade idea when the market is showing signs against it. So I have to ask myself this. And then again, another entry signal would be, if all these other things line up and it's showing that I can make at least a 2-to-1 RR at my first take profit, then these are all reasons to enter a trade. This is all confirmation that this is a trade that I should take, right? And then once I'm in the trade, because again, first you do analysis, then you pull the trigger, then you have to manage the trade. I know what I want to see. Look for what I don't want to see. I already know what I want to see. Look for what I don't want to see. And then again, protect capital first, make profit second. So if I'm looking for what I don't want to see so that I can limit my losses, it's going to be easy to make capital, right? When I'm seeing the things we do want to see, our trade's going to be in profit. So it's very easy to not, again, we can have a bias when we see the things that we want to see. Okay, that's good confirmation. Good. I'll stay in. But when we see one of those things we don't want to see, we kind of ignore it. Let's hope it goes away. And then, okay, good. I'm seeing more of what I want to see, right? That's not how I want to trade. I want to make sure I'm seeing and identifying what I don't want to see first. And then if I'm seeing what I don't want to see, being able to see that I'm seeing what I don't want to see and make adjustments. Because the goal is to protect capital first, right? So strict if-thens once I'm in the trade. Strict if-then statements to get in. Strict if-then once I'm in the trade. If we fail to break through this next opposing zone with indication of price reversal, I will exit for a small loss or accept the full risk and hold to stop, right? And then if-thens for what we do want to see. If we get a break through this next zone, then I'll move my stop and keep holding. So removing those emotional decisions from once I'm in the trade, keeping guidelines in place, saying these things out loud so I'm aware of what's happening. And then when we're trying to manage those winning trades, after we get confirmation, after we've moved up, we can move our stop loss. We can take half off, right? We can trail the remainder of our position. We want to create new if-thens and stick to those if-thens as the trade continues to develop. Are we seeing new structure that we want to stay above? If-then, if we fail to break this new structure, are we going to get out? Are we going to exit the rest of our position? And then keeping those if-thens again for the things we do want to see. If we get a break through this next zone, then I'll move my stop up again based on structure and keep holding. So even the managing of the trade is systematic. Even the managing of the trade has guidelines, right? So that's very important. So after trading, we want to refer to our intraday after check. But after each trade, for both winners and losers, how well did I follow the plan and did I achieve my goals, right? If I followed the plan, then I achieved my goal. What was the outcome of the trade? Why was it the outcome of the trade? And should the trade have been taken in the first place? Right. So again, remember those outcomes. Small winner, big winner, small winner, proper winner, small loser, big loser. Right. What was the outcome and why? Was it a small winner because we should have never gotten into the trade? Right. We got to remember that. Then we got to course correct. We should have never entered that trade, even if it was a small winner. The outcome, again, is irrelevant. Did we stick to the plan? Right. A small winner can mean we still didn't stick to the plan. So plan is different from managing the loss or a gain. Managing the trade just determines the outcome of the trade, which is irrelevant. Plan determines if the trade should have been put on, right? Sticking to the plan will tell you, yeah, that trade shouldn't have even gotten taken in the first place. So that's how we grade the trade. The outcome is irrelevant. Here's our intraday after trade check. I'm going to stop trading for 10 minutes. Allow at least 2 more 5-minute candles to form. Again, this prevents over trading. This prevents thinking you had a bad entry and jumping back in and revenge trading. This prevents a lot. That prevents a lot. It also allows 10 minutes where after the trade, we do a temperature check and we come here intraday after the trade and we read these things and think about the trade we just took and evaluate what state we're in before we continue trading, right? So identify if it was a good trade. Did I follow my plan? Again, plan is different from managing a loss, right? Did I get involved? Did I wait to get involved until my levels were triggered? Etc. Did I do these things? We need yes or no answers to these things to know, have we been trading well and what do we need to do to fix it? For small losers, why was it a small loser? Could the trade have been avoided altogether? Right? Was it a small loser because we weren't even supposed to be in the trade and we went ahead and cut it? For small winners, the same thing. Why was it a small winner? Could we have waited for a better area before we get involved? Or did we manage the proper winner and the market changed on us? So again, questions that we need answers to know if we need to make adjustments. We got to be honest with ourselves. If the trade could have been prevented, identify what symptoms of tilt caused the loser to be initiated in the first place. Right? And then stick to our levels of interest and plan before we're getting involved. So again, grading the trade. What was the outcome? Why was the outcome? And should we have taken the trade in the first place? For any loser, did we wait for our levels of interest and stick to our plan? If so, it was a good loss, right? We stuck to our plan till we were successful. Probability will take care of these losers, right? Again, if it's a part of our plan, we took the trade, we sized down, probability will take care of these. For small losers and small winners that went against our plan, it was a bad trade. This is bad trading. This is not good. Stuff like getting involved before our levels will lead to lower probability trades and could lead to symptoms of tilt, right? We do our part in eliminating taking these low quality trades, and probability and risk to reward will do its part when we find those higher probability trades, right? So again, this plan, sticking to it and not deviating from it, will get us to our end result regardless of the outcome of day to day and the outcome of each trade. These levels of interest in being disciplined to wait for them to trigger act as new rules and guidelines to follow. Our objective is following rules and guidelines, not making money. So even if we take a loss while following our rules and guidelines, we will still achieve our goals. Set alerts to these levels and walk away. More time staring at the charts when ideal conditions aren't present will lead to poor trading and trading on tilt. And that was something that I learned today as well. So then after that 10-minute, after this 10-minute intraday check, once that 10 minutes is over, if there's a trade present, if there's opportunity present in the market, then we have to restart from before trading and follow all these steps in order before placing another trade, right? And what would that do? Before trading, we would look at our last trade. What was the last trade we took? And dissect it, understand it, and pretty much just bringing us back to equilibrium. Whenever emotion peaked, whenever we make a mistake, whatever, it's okay that these things happen. But without that course correction, without that corrective action, that's when failure, that's when, bad things creep in, and that's when bad things can happen, right? So having that corrective action is extremely important. And that's why we refer back to before trading again and doing that intraday check and then referring back to before trading. So now we have our disaster prevention plan. I have an entire video talking about this. I'll link it, right? I'll link it above or in the description. But pretty much the disaster prevention plan is in place so we can identify when we're trading poorly and make the adjustments we need, right? So just like the intraday check, stop trading for 10 minutes, and review the trade. Could it have been prevented, right? If it could have been prevented, we want to identify what symptoms caused the loser. So something like failing to accept a loss, over trading, moving our stop, revenge trading, greed. I want to add watching the market all day, right? Watching the market all day. All of these things could be reasons why, symptoms of tilt. All of these things could be something that leads to poor trading, right? All of these things can be something that leads to bad trading. So you want to identify which symptom led to the loss in the first place. So I just added a few more things. And this trading plan is a document that changes and it continues to put things in place to keep you in order. But something like today, watching the market all day, waiting for my trade to trigger, right? These things are mentally exhausting. These things can have you trading on tilt, right? These things can lead to you making poor trading decisions, right? So remembering, more emotion leads to more irrational decisions and more pain until significant damage is done. right? I talked about this in the disaster prevention plan video. So make sure you guys really check that out because I had a lot of profound moments. But here's everything coming together with the disaster prevention plan inside of our trading plan, right? So again, in our disaster prevention, it reminds us of our daily goals, right? Not to lose more than what we're risking per day. And the success continuation plan is just as important as the disaster prevention plan, right? I was able to identify that when I am trading well, I tend to get overconfident. I may get stubborn to finally taking a loss, right? So these things are in place that when I am doing well, recognize that I'm doing it well and have that corrective action so that when something creeps in, we can correct and we can get back to trading well. So I have to ask myself, for winners, did I secure my profits on signs of the market changing or break rules and sell early due to fear, right? Because that's something that can happen when you're trading well as well, right? We may be selling winners early, or we may be, trying to hold a winner forever. We don't want to get stuck on targets. We don't have to get every trade right. So the biggest thing highlighted in my success continuation plan is to remember win streaks mean nothing if we allow the wins to get to our head, destroy our good habits, and give back all the gains. A winning week, a winning day, a winning month, none of that matters if we allow these wins to destroy our good habits and if we allow these wins to have us deviate away from the plan of being consistent. You can have the biggest day in your entire trading career and it won't make a single difference at all to your trading journey besides the fact that you got lucky. Continue to stick to strict if-then criteria to enter and manage trades. This prevents us from getting overconfident and just taking any type of trade. Continue to collect base hits, not home runs. Don't look for home runs. This will ensure that we're able to consistently secure our profit when the market makes the profits available, right? This makes sure we don't get overconfident and start just, let me just swing this into 2020, into 2020's lows, right? Like that makes sure that we're being realistic still. We're being consistent. And then we're going to continue to have slow, steady growth, right? So the daily is to prevent loss. If after one good trade, we're green, but we haven't hit our win goal, we don't have to force it, right? Don't get overconfident and ignore the signs that the market is changing and proving us wrong just because of a win streak. Do not. And again, the same thing, even after we take a winning trade, restart from before trading and follow all steps in order. Why do we have to do that again? Because restarting at the beginning is going to give us that temperature check again, right? We already have a temperature check because after this winter, we have to refer to after trading. But we also have to go to before trading and make sure we don't skip any step in the process, right? And if we do all of those things, there's a higher odds. We're setting ourselves up for higher odds of success. If we do all those things and follow all those steps in order again, it's much higher odds that we won't make the same mistakes over and over again. So this is how I plan on becoming consistently profitable by the end of 2024, man. It's a lot. Make sure y'all check out the videos I referenced throughout this video. There's a lot of good information in them. I broke down some of these concepts a little bit more in depth. And if you guys found this video helpful, make sure you leave a like, drop a sub, and hit the notification bell so you don't miss our next video. And I'll catch you guys in the next one.